Good afternoon, everyone. Welcome to today's LinkedIn live session. We will discuss grain market under pressure, logistic disruptions. Today, we will discuss how logistics, such as the potential closure of the Strait of Hormuz, are impacting the global grain market. It is huge impact we are seeing right now. Many thanks to our today excellent speakers. We have with us Sergey Doskach, Managing Director, Vimeksim, Vivian Aroni, Senior Price Reporters, European, Middle East and Africa, Food S&P Global Commodity Energy, Hasham Soliman, President, Mediterranean Star for Trading Company Limited, and Bogdan Kostevsky, Commercial Director, Barba Invest. Many thanks for being with us. It will be very useful session, I'm sure. And the first, let me take like a few minutes to present International Grain Forum. It is conference held on 18th of May 2026 at the Agriculture Fair Novi Sad, Serbia. Hybrid event. We are expecting 600 in-person attendees and a significant number of online attendees. We are pleased to announce that the International Grain Council and North America Export Grain Association are joining the IGF today conference. Just briefly to go throughout the panels, all panels are designed to provide practical insight and concrete answers to support daily operation in the grain industry. So as the price volatility is very high, so we put attention on the hedging strategy, and we do have two panels dedicated to hedging. First is hedging with exchange traded instruments. And we do have pleasure to have Eric Hasham, Senior Director, Chicago Market and Exchange Group, and Ryan Eastbrook, Head of Grains and Oilseeds at ADM Investor Service International Limited. Second panel is hedging with swaps. We are exploring the mechanics and advantage of swaps, particularly in reducing basis risk important from the Black Sea and some other regions. Third panel is global and regional market outlook, and we do have the speakers, very relevant speakers, Amrutka Delepi-Cinkoglu, Association Price Reporter, Agriculture, Food and S&P Global Energy, Bojan Kostevsky. Bojan is with us today, Commercial Director, Barba Invest, Gerald Masila, Executive Director, Eastern African Grain Council, Mehmet Çakmak, Chairman of the Board, Turkish Roll Industry Federation, Alexander Karavaitsev, Senior Economics, International Grain Council, and the moderator facilitator is Matthew Curie, Senior Economist, North American Export Grain Association. Panel 4 is Grain Logistic, Danube, Black Sea and Global Corridors, Nikolai Gorbachev, President of Ukrainian Grain Association, Monika Totova, Senior Economics at UN, and CHS will be present at this panel. Fifth panel is as the price forecast is changed just in a few years. So we dedicated the fifth panel to the price forecasting in the age of geopolitics, climate extremes. How reliable are we? In this session, Professor Mandic, agriculture meteorologist, will try to answer us how reliable is mid and long-term weather forecast and what to expect in 2026. Sergey Doskach, Sergey, you are with us right now, Managing Director, Vimeksim, and I do have to thank Sergey. He's our partner in AI Intelligence. There is a lot of, and motto of the International Grain Forum is digitalization and AI in the grain industry. So Sergey, many thanks for being with us in this panel and supporting us. And the third panelist will be AI Avatar. We are developing with Sergey for more than 2 years AI price forecasting. So we will have chance to speak with the AI speaker. So it will be, I guess, something new. Moderator is Craig Fedchuk, consultant on digitalization, North American Export Grain Association. And just to add, with advanced networking platform, a participant will have full networking opportunity with all participants before and after the conference. So You may find more just by searching International Grain Forum, or you have in the comment link to the landing page. So without saying this, today's panel is open. Just please join the discussion, ask the question, put the question in the comment, and we will do our best to answer all your questions. Many thanks, and Hesham, floor is yours. Thank you.
Thank you. Okay. Good afternoon, everyone. My name is Hesham Soliman. I am the president of Mediterranean Star for Trading. I am from Egypt, and today we will give a quick points on what's going on and what's the reflection of that situation we are facing and geopolitical problems coming out from the Iranian war. Now, all of us know that this geopolitical problems changed the market. We are now get used. I have been in this market since 25 years. We are studying demand, supply, crops everywhere, the weather. Now the elements have been changed, and now we have to see what is the geopolitical problem are doing in the market. It's not anymore supply and demand only, but it's become a nightmare for the traders. They cannot make a long-term plan or design, go short or go long anymore, because what's going on. For example, if we're talking about what's going on Hormuz Strait right now, it's a nightmare. Can you imagine that we have 2,000 vessels are waiting to cross this strait? It's the effect of this situation. It's as you know that the Gulf area is responsible for 20% of the export of ammonia and urea, and this will affect definitely the crop in 26, 27, because the fertilizer prices went crazy. And I guess now the farmers who is expecting their crops in June, July, they need fertilizers in countries. I'm not talking about Russia, because it's they have their own fertilizers. But countries like other destination, we will suffer. They will suffer from there is no fertilizers, and if they find it, they will find it very expensive, which will reforming the next season and the next crop. Okay. For example, due to what's going on in the Strait Hormuz, the energy prices in oil changed. First of all, the crude oil, we heard for the first time since long time that the barrel exceeds the $100. Now I know it's between 80 and 90, but after the failure of the discussion between United States and Iran, as all of us heard, will keep putting pressure on the oil prices, which is reflecting on the price of the freight as well as the insurance. I will give you an example, not because of Egypt. I'll take Egypt as example because Egypt is one of the big players in the grain market for imports. We're talking about country normally imports between 28 to 30 million tons of grain yearly. This increase make the prices like this. This is before the war start. We're talking about the Russian wheat and Ukrainian wheat and Romanian, as well as the corn in Ukraine and Brazil. You see, it's normal prices. It's very competitive. Nothing went wrong. We have it everywhere. Everything goes smooth. And after the war started, see the changes here. It's minimum between $9 to $11 increase in the prices. And the problem itself, not only the prices, you have the freight, you have the insurance, you have the risk, you have that the logistics itself in each port have been changed. A lot of delays in shipments and problems Some of the insurance companies started to say, no, I will not take the risk in this destination, and so on. The supply start getting pressure. And now, once they stay, we will stop, we will see the fire, the market start to calm down, and we see that the Russian wheat, 12.5, for example, come to 262 out of 267 while the war is going on. But now, after the failure of the discussion, I think the pressure will remain, and we will see a lot of issues coming out in next days. And one of the other impact that hit Egypt is the foreign currency, foreign exchange. For example, we have at least between 6 to 7 pounds increase in dollar rate. The devaluation of the LE affects the market dramatically. Okay, so these changes have put the Egyptian government, for example, under pressure. How they will handle this? What is the gap? Because once the war started, the Israeli country sent it to the Egyptian government saying that we are stop export the gas to Egypt. It's under the force majeure. And Israel is one of the big suppliers of the gas to Egypt. The gas is using for electricity, for the fertilizer factory, for houses. So we were taking the price of $7 from Israel. We went into the market and we buy it with $15. So the government has no other option. They increase the fuel prices, the electricity prices, the gas prices, which put more pressures on the citizen in the country. So this because of the war. Without this war, everything was going very stable. Now, what happened in the MENA region and the Gulf area after this war? All of us seeing the countries like Saudi Arabia, Algeria and Jordan, a lot of countries, Tunisia, for example, Egypt, everyone tried to secure the supply of the wheat and how they will secure it. For example, we saw that Saudi has been issued a tender. They bought almost 800,000 tons, as well as Jordan and Algeria keep buying. And for example, the Egyptian government, although that the local crop will start the harvest tomorrow, they would like to, and for their first time, to give the farmers the price is not existing in the market. They offer the local farmers to deliver their wheat to the government a price $300.10. This is not existing. So it's very good prices for them. The government are targeting to get 5 million tons this year out of the farmers. The country importing, as we mentioned, 13 to 14 million tons, and yearly the government get used to collect from farmers 3.5 to 4 million ton maximum. This year they increase the prices and they keep buying. And for example, Egypt in the Q1 this year import almost 3.95 million tons of wheat. Okay, I'm talking about private sector as well as the Mustaqbal Masr agency. So it was representing the government instead of GASC. So for the problem itself that now how to secure, it's not a matter of price now, because nobody knows tomorrow what will be the price of the oil. So if oils keep going up, that's mean freights will keep going up. That's mean also insurance and logistics price, commodity prices. So everyone now is trying to secure first the demand in his country, regardless the prices, because nobody predict what will happen in next week. For example, I'm not talking about long-term plan. I'm talking about current situation and how every government trying to solve this. The result is the current status right now. Grain market are under pressure. even in corn, soya, wheat, all the grains is suffering right now, even crude oil. And I expect that after the failure of the discussion between Iran and United States, we will see more pressures coming out on the oil prices as well as on the trade prices. As I mentioned at my beginning of my presentation, it's not only demand and supply. No, we have other elements coming out of the geopolitical problem, which we have. The traders have to take it into consideration. We will not use to take it into consideration. But now, if you are trying to cover 2 months in ahead, it's not that easy as before. Maximum you can do is 1 month, because even the supplier, why I sell today and I don't know tomorrow what will happen. So we are facing a little bit tightening in the supply. Demand is already existing in the market, but prices are not matching. We were starting the season, for example, for wheat and corn with 220 to 30, and now we are talking about 260, 250, and it will keep going. My expectation, with 1 or 2 days, we will hear 270 again in wheat, and as well as 265 in corn, due to what's going on. Prices should go back to normal case in case that this war is stopped, but nobody can tell when. It seems that a little bit we are going to live in this situation for more time until they find a solution. Although, and there is no peace till everyone gets satisfied from what he needs from the other part. So I try to be quick. I try to focus on the elements that affecting the market. My expectation for the trend, as I mentioned, we will face a problem, very huge problem in the season of 26, 27, because of the fertilizers. This is will kill the quantities that the countries are cultivating, because even not only the quantities, you will see the prices dramatically, because the cost of the cultivation today everywhere is expensive. You have fertilizer is very expensive, the logistics is very expensive, the fuel is expensive in everywhere now. So the trend will be not good for the next season. This is my expectation for due to this situation going on in Hormuz Strait and the geopolitical problem between Iran and the United States and Israel. Thank you, and I'm open for any question.
Many thanks, Keshan, for excellent presentation. So we are agree absolutely on everything. And Vivian, would you like maybe to take the floor, please?
Yes. Thanks, Vlado, for organizing this session, especially at such a critical time. Hi, everyone. My name is Vivian. I'm a senior price reporter at S&P Global Energy Platts. And today I'll be focused more on the grains prices, looking specifically at wheat and corn during the impact of what has happened in the Middle East. The chart here sort of shows, as Hisham was pointing out, the trend in prices for different commodities, including Platts dated Brent, which went up 61%, but also gas, shipping, metals, fertilizers, and chemicals as well. So what has happened in the Middle East is sort of an impact across different commodities as well as grains as well. Next slide, please. So Platts publishes global grains and oilseeds assessments and benchmarks, both physical benchmarks and financial benchmarks as well. Globally, from corn to soybeans to wheat, also protein markets as well, like chicken, shrimp, and also the feed markets as well. Next slide, please. So this image sort of shows the impact of what happened and what is currently happening in relation to the logistics and the price hikes, impacting freight, fuel costs, currency, And with the wheat reserves, yes, they are sufficient for several months. So the immediate procurement is sort of stable. But if the war prolongs, the logistics are continuing to be more and more difficult to sustain. Some corn shipments, especially for Ukraine, were rerouted to the Mediterranean and the Red Sea ports instead of the Persian Gulf. And also other commodities like sugar and chicken as well have forced producers and importers to use alternative routes like trucking. Next slide, please. So this chart shows the milling wheat marker, which is the Platts global benchmark for wheat, which represents exports out of the Black Sea, Russia, Ukraine, Romania, and Bulgaria as well. Black Sea prices reached August highs post the war of Israel, Iran, and the USA. The prices peaked to August highs. Though prices have slightly declined, they still remain sort of in elevated prices in the high 230s. The last time that the prices were this high was when sort of the harvest in the Black Sea was delayed, and so exports were slow. But then prices dropped quickly due to sort of the weak demand on the quality concerns and also improved yields overall. So the main question for the market is, will prices sort of recover and reach the 40s to 40s, and will demand sustain as well? Next slide, please. So in terms of input prices, you can see Platts publishes the SIF Marmara Costas prices, which also reached December 2023 highs, mainly on freight and fuel increases as well. This represents also the chart is spread against the milling wheat marker, which also reached an all-time high as well. Platts is proposing to launch a SIF EastMed basis Egypt 12.5 wheat assessment, especially given the market conditions. We think this price would be interesting. And please send any comments, feedback, and questions to my email and to my phone number. And if you scan that QR code, you will receive details about this proposal. Next slide, please. So I wanted to touch on Ukraine specifically because alongside the increases in what's happening, Ukraine is already in a tough position, adding on to other wartime pressures as well. Either domestically, the logistics are expensive, the labor shortages, and just ongoing security risks and hope strikes. This chart represents Platts Ukrainian wheat and Ukrainian corn prices. Urea jumped to 850 post the war, double what it was before the war began, and also diesel prices in the country also rose 20%. The market is looking onto new crop prices, which rose also slightly. CPT is currently 215 for the feed market and around 218 for the milling market. And although sort of there's limited immediate risk for the 2026 crop due to enough fertilizer stocks, the market is looking into the yield potential for 2027. So Ukraine is already in a difficult position, and the increases sort of add on to what is happening in the country as well. Next slide, please. Touching onto the global corn market, overall the trend is has been a little bit bearish, even though there has been some increase since the war began. And this is primarily due to the fact that a lot of these countries, Brazil and so forth, have an abundant supply. If we look at Ukraine specifically, again, the prices for Ukraine are currently at the highest they have been since the season began around September, October. And the prices are ranging at the minute around the mid to high 220s. But overall, traders are sort of like pointing towards a bearish trend in this market. But with the conflict, the prices will be seen in this market. Next slide, please. Overall, the global trend to monitor, the planting season sort of has somewhat completed in the countries, in origin countries. So the weather risk is something to monitor, especially during this period. The weak farmer selling and also the negative margins, and of course the logistical challenges and the port strikes as well, are all good factors that could contribute to prices going up. On the bearish side, the market is oversupplied with wheat, and there is intense global competition, as well as expected large carry-out stocks. And the buyers may adopt a wait-and-see approach, especially given the market conditions, but also the local harvest in several countries. For example, Turkey, that expected a record production, is something that could point towards a bearish trend. The swing factors are always what's going to happen with the peace talks and the war, any swings in exchange rates, which are already at strong levels. For example, let's take the rubles, and also any Chinese economic stimulus on whatever is going to happen in the Chinese market. So, next slide, please. That's all from me. Thank you very much. Please do reach out to me. I look forward to receiving your feedback on the Fifth Egypt 12.5 price. Thank you.
Thank you very much, Vivian. Just excellent presentation as usual. You used to from you. Many thanks, and we can only agree. And your EG benchmark would be very useful for sure. Sergey, you are like a very significant trader, and maybe to hear from the trader's angle how you see the situation right now. Thank you.
Yeah, thank you. I'm glad to be here. Good afternoon to all. I'm Sergey Doskach from Vimeksim. We are trading grain and oilseed and managing actively flow across multiple regions. So I won't be focusing on the broad macro views and actually on what is moving market right now. My perspective is not theoretical. It is based on what we are seeing in a real transaction, real trade, and real problematic in logistics on daily basis. So if we have a look today on the current market, it is important to understand that we are not dealing with some structural shortage. Global supply is pretty comfortable, especially in the grains. But the market doesn't behave like a comfortable one, and that's the key contradiction for me. And for me, the reason is pretty simple. Logistics and the news have moved from background noise to primary market drivers. What does it mean? Today, all disruptions are not necessarily stopping the flows like we saw in the Ukrainian war, but they are distorting them. And this is where the key risk is coming in. For example, any escalation at Strait of Hormuz immediately impact energy and freight expectation. Ongoing Red Sea disruptions and Black Sea continues to reshape some routes. Inland bottleneck in Ukraine add additional friction. And on top of that, we have additional new layer, which is political volatility. We have seen already how quick statements and unexpected moves from the figures like Trump affecting the market and shift sentiment almost instantly. And additionally, what is different today is the speed. News travel instantly and market react instantly, sometimes even faster than the physical market can adjust. So you see that the price is changing, not because something is already changed, but because market expect it. However, it can be totally different. And as a result, trade flows are no longer optimized. They are reactive. We see longer routes, sudden freight spikes, temporary dislocation between the regions where we see different prices and different supply. And that creates ineffectively in directing pricing. For the traders, it's actually the game changing because you need to have a skin in the game. it's not longer about the prediction or feeling. It is about reacting faster than the market stabilizes. Freight become part of price, essential part of the price. Spreads become more important than the flat price, and the managing exposure, it becomes crucial. So for me, we are not in bullish or bearish market structurally. We are in reactive market, driven by events, logistics, and sentiment. And in this environment, speed and flexibility matter more than prediction. The market now doesn't trade fundamentals; it trades headlines. So, for example, the Hormuz is not only just oil story; it is the freight story. And whenever there is some news, something happening there, freight prices immediately reacting. And then you cannot predict what will be your price and how competitive it will be on the final destinations. We are facing it from day to day. We are now monitoring all the news, very important news, all the statements from every figures to see where the market is going. Political volatility is now part of pricing, whether we like it or not. And reaction time has become a competitive advantage in the trading. So for me, market today is driven less by pure supply and more by the behavior of the participants. We clearly see that every major headlines, whether geopolitical or political, immediately changes the intention of the sellers. One day they are holding back, and the next day they are aggressively offering. At the same time, buyers remain active, but also monitoring the positions and the current situation in the market. So whenever the sellers are holding back, buyers are calling, and the prices are going down. In the same time, the shipment period of 30 days became too short because you simply cannot find the vessel, and those factors are basically a key point. We do not trade paper anymore. We trade behavior and expectation. Global supply may look comfortable on the paper, but what really matters is how participants react in real time. So from my point of view, we are now in a very volatile and very progressive market, and we need to adapt. And how you react and how is actually your competitive advantage. This is basically all for me. Thank you.
Thank you very much, Sergey, for excellent presentation.
Can you hear me?
We heard from the traders angle. I know that you are trading every day, and you are in the hot spots actually right now for sure. Thanks. And Bogdan, floor is yours, please.
Yeah.
Thank you. Well, I will try to be brief. The next presentation is just an assortment of different bullish and bearish factors which are accompanying major commodities we are trying to analyze: corn, wheat, barley, rapeseed, soybeans, and sunflower seed. In all of these slides, you will see that we are expecting prices to rise. I have to comment that what we are witnessing right now, enough was said by esteemed Mr. Doskach and Mr. Soliman and Ms. Irania. I think this conveys very clearly and concisely what's happening. I think we are witnessing right now the destruction of the supply chains, and to put it in allegorical shape, I think we are looking at the first dominoes falling. There are many more dominoes to fall. Mr. Soliman, you said that prices have risen dramatically in Egypt by $15+ per ton. But we can tell you that prices in Ukraine, for example, and prices in Russia, they have improved marginally. We are counting dollars here. And I think all of that price increase was eaten up by costly and substantially less available freight. So what we are witnessing here, I'm not going to stop on all of these slides and read you the bullets. You will all receive them And I personally prefer to look at the presentation in a quiet place on my own, read into it and so on. I just want to share my opinions. What we are witnessing right now is both importers, major consumption markets, and exporters, the oversupply markets or exportable surplus markets, they are on a stretch. And the stretch is like the opposite or yin and yang stretch, if you wish. The destination markets are trying to make it to their own crops. If we're talking wheat, they're trying to, they're probably crossing fingers and hoping for some resolution in Hormuz. And they are switching to hand-to-mouth models of consumption. Basically, what we are witnessing right now, we haven't seen a lot of appetite to book the shipments for the coming months. Same time, Ukrainian market, for example, let's look a little bit deeper into corn. We will have 5 million tons of carry out into the next season. We have a potential to export this year 26.5 million tons of corn. If we do 21, it will be a very good result. And one could say, yeah, let's short this corn for the new crop. $215 delivered to the port is a good idea because it's actually representing the average of the past season. It's, if you imagine that the producer is covered with the inputs, he is not only breaking even, he's locking in a decent margin. But we are witnessing very weak sales, and this will go for every commodity we have on our menu here. The reason is that as hand-to-mouth stretch at destinations, we have a hand-to-mouth approach to sales at origins, because especially when you're talking about the new crops, which are coming in literally in a couple of months. Looking at cost per hectare and bearing in mind the indexation of the fuel and fertilizer prices, we already see approximately 20-25% increase in total cost per hectare production, which is bringing the break-even literally very close and uninteresting to trigger any sales for a farmer. When we are looking, for example, at rapeseeds, first of all, we have lost a substantial amount of rapeseeds due to winter kill. We expected 3.5 million tons of crop, and now we are looking at 3.1 million tons. And the farmers are trying to catch the hikes and spikes of the market whenever the crude is going further up, close to $108, $110. As you know, the correlation of rapeseed and crude oil is quite tight. So some farmers are selling, but when I'm talking to my ex-colleagues from ABCD companies, and they're frankly sharing with me what are their successes, they have something to compare to in the previous years. So when I ask them, how much rapeseed have you bought in your books? What's the tonnage of your forward book right now? Well, I don't get the exact numbers, but the answer is it's like 3-5 times smaller than the same time last year. This is very clearly reflecting the attitude of the farmer to hold and to hope that this chain of dominoes falling will eventually result into not only compensation of more expensive freight and this increase of prices at destination, but they're hoping that they will actually get the same kind of profitability they were counting on. For that, they need prices to improve by tens of dollars per ton in grain and maybe $50+ in oilseeds. This scenario might not materialize. I even talked to a few big producers. They say, as cynical as it sounds, for us it's better if this Hormuz crisis continues, because this ensures that all of the dominoes will fall, and they will fall faster. And this will, let's put it this way, inflation boomerang will come back faster and reflect in the commodity prices. So, yeah, I don't want to take too much of your time, Vlado. I'm sure you will be able to share this presentation with participants, and I would appreciate any of your feedback. If you have some particular questions right now, I would be very happy to answer them. But otherwise, I don't want to occupy any more of your time. Thank you for your attention.
Bogdan, many thanks for excellent presentation. And we do have the question, of course, maybe Hesham, for you, Muhammad asked if the Strait of Hormuz were to be closed, can Egypt and Algeria work together to fill the fertilizer supply gap?
I guess because, as I mentioned, 20% out of the export of ammonia and urea is coming out from Gulf area. So we're talking about 20% of the total is not existing now. So prices, if keep going up without the supply, this will affect the crops and the yield for each hectare. So now it's the problem. It's coming also not only from the what's going on Hormuz, because it's a lot of we're talking about a lot of vessels are waiting there, and there is a shortage in energy. Like oil is keep going up now, and I guess from what I hear from all the presentation and my colleagues, we totally agree. If the war stop, the prices will collapse. It's going without saying. But when this will happen, nobody knows. So the pressure, the more the pressure in fights in Hormuz, it will affect the prices, not only energy. It's urea and supply of urea, supply of gas, supply of oil, and will affect dramatically the prices of the commodities. And this is as Bogdan mentioned, it's the prices going everywhere, not only in Egypt. Now the prices is going up, the foreign currency is changing, and the dollar is getting strength against all currencies. So what I'm a little bit afraid is expectation. If this situation is remain for a long time, this will affect the cost of the harvest for the new crop, because it's you use elements is very expensive, and logistic was very expensive while you are cultivating the crop, and now should reflect this in the prices. Furthermore, if there is a shortage in urea, that will definitely affect the yield per hectare everywhere.
Let's agree. Many thanks, Hesham. We just absolutely agree. Silvio placed the link to some kind of the market information. So if you are interested again, you can see Silvio's link in the comment. We do have few questions. Most of the questions are related to the cost of the production. So as the cost of production are already increased, especially it may be for corn, if those input prices persist to rise. So the question, one of the question is if it may be affect end of the 2026 and 2027 as the cost of productions are higher.
Yes. Yes. So let's take example for feed market, for poultry business in Egypt. For example, before the war, the net price for 1 kilogram of poultry was 55. And after the war, it goes up to 115 pounds. It's almost the double. So we are talking about big business in Egypt. We are talking about 1.6 trillion chicken as a total production in Egypt. Prices went up, as well as the meat, the red meat prices. We have increased in it not less than 8 to 10%. So everything is going up. Corn is up. The gas for the factories is up. So transportation, even land transportation, because the governments are increasing the fuel. So the cost of the production definitely had at least 25 to 30% increase in the cost. This will reflect in the prices. And this is what I'm talking about. Even if tomorrow the war stop, at least you need a couple of months to get rid of the high cost that you paid during the war. Because, everyone is looking for the cheaper price, but there is no cheap prices. The supply is very tightened right now, and that we are not saying that there is a shortage in crops in anywhere, but the problem itself is the logistics. How much it will cost you for a freight to get cargo from point A to point B. So it's now it's not only the price of the commodity, where before the war, it's normally that you can buy FOB and then you can get the freight, a vessel, and that's it. Now it's very dangerous that you buy FOB and you cannot get a freight, or you cannot get the vessel go to this destination. And or even you calculate your cost with a good price in FOB and you get a big or expensive freight rate, so it gets you out of the market. So it's better to you now to buy CNDF or CIF, whatever, but you are not putting your hand in the prices of freight and logistic cost. No one can predict what will be tomorrow, the freight and the barrel of the oil. So every day, now we hear from the market right now, even the ship owners give you 1 hour for the vessel. Take it or leave it. Not before. Can you give it to you and wait for your answer 1 day? Now it's not existing in the market.
So I agree. It's really very, very volatile and really hard to predict everything. So we do have a lot of questions. Just Evgen, meantime, wheat price in Egypt are going down and the freight is going up. Less the money get Egypt because of the high prices. Is there any comment on that?
For Egypt is 120 million citizens living in it. This is without the tourism. I know that the numbers is going down, or the refugees. So plus you have 2% increase yearly in population. So the market is growing year after year. So these people has to eat. Although that the prices is going up, but at least the demand is there. I know that everyone is trying to minimize his demand, but still the market needs some needs. For example, if we're talking about wheat, the wheat in this month, in March, while all the crisis and going on in the war, Egypt import more than 1.5 million ton in this month. Now, the first quarter were almost 4 million ton imports. For example, the corn, 2.4 million tons in first 3 months. Soybeans, 1.250 first 3 months. So no, the market still, we're talking about now more than 8 million tons of imports come in January, February, and March. So that means that the market is moving, not stopping because what's going on.
Okay, thanks, Keshem. We have one more question. Excellent presentation by all participants. To the point, considering that the big carry out in BC and Europe and the normal looking new crop, can we expect price growth to cover the extra freight cost? In the end, will the inflation be covered by the farmer with the lower FCA price as there is oversupply, or by the final customer? It's a major question by the farmer.
Let me take that. Okay, the hope of the importer, I will just repeat myself, is this mess is over and the supply chains are reestablishing themselves kind of as we will know them, as we knew them. The hope of the farmer is that he gets the compensation in this form or the other. Mr. Soliman has said very correctly that fundamentally, we actually have no reason to voice any concerns about supply availability. But what Mr. Soliman has described in details is how fast the dominoes are falling at the destination markets. Imagine if you had just 6 weeks ago, the price per kilo of chicken, 55, and now, as you said, Mr. Soliman, 115? This is like more than a double, correct? So imagine how big is the inflation provocation in this case. So I think that this inflation boomerang, this is what the origin of the markets is waiting for, the originating the production markets. And naturally, the sales right now are hand to mouth because logistic is a killer. Same as you said about the vessels, Mr. Soliman, it's also about the trucks. Now the middlemen are buying diesel fuel, and then they charter the truck and they hire the driver, because you cannot fix the freight on a truck in Ukraine. Similarly, as it was, as you said, in the vessel bookings. So I think right now the logistics are eating it all up, heating it up in the supply chain like a dominoes falling, and we will have the inflation boomerang flying in inevitably. I wouldn't cherish much hope that Strait of Hormuz opens and we all of a sudden will see up to $70 per barrel crude oil, like Brent, which is now, I think, close to 100 the last time I checked. Bear in mind that the supply chains and the origin facilities, the production facilities were damaged. So it will take not weeks, I think months to recover. And secondly, I believe that we actually have not felt the full shock yet. Some of the Asian countries are starting to feel it because, as you know, the crude oil tanker is moving with the speed of the bicycle. And those tankers which are discharging right now in Europe, they have departed before the Epic Fury began. Those tankers which are not arriving now in the Asian countries, those were the ones which are stuck in the Strait of Hormuz. So I think that inevitably, irregardless of development of the situation, as we can see, it only escalates to the worse. Now we are blocking everybody. We are blocking the blockade. I mean, Mr. President Trump is doing that. So I think we are witnessing a collapse, to be honest. And in that respect, being a producer, your best natural hedge is just stay naturally long. Sell hand to mouth, just what you need. And we consult many big and medium producers in Ukraine. And that's exactly what they're doing. They're selling hand to mouth. So who blinks first, importer or exporter? It's a tough bet for me, to be honest. But I think they have to come somewhere in the middle. Thanks.
Thank you, Bogdan. We have one more question for Vadim. Hesham, maybe you will know better. What is the situation with future of Egypt? They had problem in past, but now they are again in market. Did they solve their situation with payment?
Actually, Mustaqbal Masr agency is working, as all we know, it's an army organization. And replaced GASC. This is their second year in the market. So normally they face a lot of problems at the beginning of their performance. They're trying to solve it, and they start hiring professional people from the private sector to help in the trading. And now they get for payment, they have a specific rule in the Ministry of Finance that they get the approval before they buy, just to cover themselves before opening the letter of credits for suppliers. So things start to calm down with them. The problem itself is that still is the suppliers who still afraid to work with them, because it's normally in the past with the gas, if you have a problem, it was solved in closed room, but now it's there is no more flexibility like before with gas. So some people are doing some precautions to work with them and leaving them to show them or to get more experience in buying. Because till now there is no tenders in Egypt since the gas is out of the market. They buy with direct order or direct deal with the suppliers.
Okay, many thanks, Kesha. We are getting information firsthand. Thank you very much. Other questions are related to the cost of production price. I believe we already answered all those questions, and I'll have to thank you very much.
If I may to add a little bit.
Sorry.
Yeah, sorry. If I may, I want to add something about the Muslim situation. So you said, Hesham, you said that they need to get some kind of approval. From whom? Because from my point of view and my experience, it is very hard to work with.
the one is opening the letter of credit till now is the GASC, not Mustaqbal Masr. So normally
So
they
basically,
send a request.
letter of credit to Mustaqbal Misir, and Mustaqbal Misir is transferring it to the final to the seller, right?
Look, it's the system is going like this. It's a committee of three: the central bank head, as well as the finance manager and the head of Mustaqbal Masr. This is the committee. So they usually agreed on the quantity and the prices, and then the finance minister work on securing the money for opening the letter of credit. So this was the problem. Sometimes some vessels arrived to the country without opening the letter of credit. Now, after this committee, they solve the problem. So because the Ministry of Finance saying, I have no idea that you are buying, so nobody tells me to open or arrange money for a letter of credit. But now they solve this situation by coordinating between the central banks, the Ministry of Finance, and the head of Mustaqbal Masr agency.
So basically, they will be opening the LC by themselves?
Yes, not by themselves. The money is on the Ministry of Finance, and the one who is responsible for opening the letter of credit is the GASC, not the Mustaqbal Masr.
Because you see, the main problem
because
was...
they have the experience how to open the letter of credit. I know that all documents coming, it's in the favor of the Mustaqbal Masr, but the one is opening the LC is the GASC team.
Yes, exactly. And then a lot of vessels were on demurrage, and the problem is the timing.
Yes,
so
this was in year one. I totally agree with you. This happened in year one. Because they have no idea on the international trade terms, but they improving year after year. We're comparing organization with 40 years experience, which is GASC, with Mustaqbal Masr, it's only 1 year and 3 months experience in the field. Definitely they should face some international trade problem.
Yeah, we met those people, and it was interesting conversation. But as you are saying, they are a lack of experience and lack of some general rules how it's working, and especially the lack of flexibility.
Yeah,
however, this structure can work and could be interesting for the supply of Egypt. I mean, Egypt is a huge market for all of us, and very interesting to go in. With the current structure, it is very hard.
Yeah. I totally agree with you, because it's the problem itself. Because I told them, I met them many times. The problem itself is that the international trade has their own language. Trading has a specific language. You are following GAFTA rules, not any rules anywhere else. But the first year they said no, it's our rules. So it was not that easy that to convince them there is an organization putting the rules, not you. So it takes time. But now they know that there is rules coming specific for the international trade.
Okay, so I should give them a call. Okay. Thank you for your insight.
Okay, should be the expert in Egypt market. Okay, if there is no other question. Many thanks, Vivian, to you, Hesham, Sergey, Bogdan. It's just excellent. I'm sure very, very useful presentation for our traders. And thank you all for joining us today. We look forward to welcome you at International Grain Forum Conference here in Novi Sad, online or better in person. It's on May 18th. So see you there, and we will have another online presentation next week. Many thanks once again, and have a very nice day.
Thank you.
Yeah.
Bye, everyone.
Thanks, everyone. Bye.
Bye-bye.
Bye.